Okay, good morning, everybody. This is Dan Russo, the Chief Market Strategist at Chaikin Analytics, bringing you your update on the current market environment. It is November 6th, Friday. It's been quite the week. Hope everybody is doing well, getting ready for a good weekend. We're going to obviously dive right in. A lot of moving parts this week, still a lot of unanswered questions. As of this recording, we do not know still who is going to be the winner of the presidential election in the U.S., but the market is already moving, placing its bets and repositioning. And I think that the past few days have largely been a story of repositioning within the marketplace, and we'll talk about what that means as we go through the slides here this morning. So SPY has obviously had a solid week this week. I mean, we rallied pretty much every day of the week. Neutral rating still for SPY. Power bar ratio improved a lot over the course of this week, flipping back to a bullish ratio. We have 140 bulls for 76 bears, and the trend is strong once again as the fund has rallied above the rising long-term trend line. And I think that, if we're playing the odds game, the odds are that we are going to get back to these highs here from early September. And, I've been saying it all week, right? To say it here on a Friday morning is not exactly a bold call, as we're pretty much there as we speak. But it's been our view basically since we broke through 340. If you break 340, what I said was, the odds greatly increase that we're going to head towards the highs. Remember last week we said holding 320 was important. We held 320 and we rallied. So about 2 weeks ago, we started making the call that it made sense to become more aggressive on the long side of the portfolio. We were early by about a week on that, but it's largely playing out. But what's interesting to me is that for all the strength this week, whether we look at the SPY or we look at the Qs, we're still in the range. We're going to look at the Qs in a little while because they've had a great week. We're still in the range, right? So from a near-term trend perspective, not a ton has changed. Odds have tilted that we're going to move topside, but the trend itself has not changed. We're still consolidating within the context of this near-term uptrend. So that aspect is interesting, but when we get under the surface, we can start to say to ourselves, all right, the probabilities of us moving higher have increased. Are they guaranteed? Absolutely not. But they've certainly increased over the past 4 days of trading. Small caps are interesting. Bullish rating here, solidly bullish. Power bar ratio, 744 bulls, 248 bears. Strong trend, right? You notice that small caps never tested their September lows. They made a higher low, held the rising long-term trend line, and now we have a near-term breakout out of this consolidation. They are still contending with their highs from earlier this year, have not made new record highs yet. Like the SPY and the Qs did in early September. But what's interesting here is the outperformance. The relative strength has been consistently improving over the course of the past month and a half. We're rounding out of an oversold position. Money flow is bullish. So small caps are an interesting trade here because I think they were part of the blue wave trade. So the fact that they're holding up subsequent to not getting a blue wave on the election is compelling, and it's interesting if you're bullish on the market. Now, a lot of people, the entire market was positioned for the blue wave, and a lot of those trades over the past 2 days are being unwound. And I think one of the places where we're seeing that in a big way is in the Qs, right? Big winner this week, the Invesco QQQ Trust. Bullish rating held where it needed to before rallying. We said 260 was the support level, and then a break of 280 sets the stage for a move to the upside. That remains the case. Like the SPY, we're still in the range, but the Qs are a big winner here, along with tech and comm services, because this was a consensus short on a blue wave, right? If you think about the Democrats taking control of both the Senate and the House of Representatives, we've been hearing rumblings of regulatory risks for some of the big names, some of the big fan mag stocks, due to a perceived monopoly positions, if you will. A Republican Senate and a Democratic House probably lessens that regulatory risk a bit. Does it go away? I don't think it goes away, but it certainly dampens the regulatory risk. At the same time, the lack of a blue wave likely means a smaller stimulus package, and a smaller stimulus package could weigh on investors' views of global growth. And remember, for the past 2 years, we've been talking about the fact that global growth has been selling. So you've wanted to own growth stocks, right? In a slow growth world, pay up for what's actually growing. The blue wave scenario was massive stimulus that could potentially spur growth, right? So we've seen growth stocks come off and value stocks begin to rally. If we're going to get a smaller stimulus package. Now, I still think stimulus is when, not if, but it could be smaller than investors were anticipating. That could weigh on growth. Throw in rising corona or COVID case counts and new restrictions in certain parts of the world, and you can certainly make the case that investors have to recalibrate their growth expectations. To the extent they recalibrate those to the downside, growth stocks begin to look compelling again. Hence, the Qs have a monster week this week and begin to outperform once again. Now, one of the Qs that we take, Qs as in signals, not QQQs, is from the semiconductors. Longtime followers of my work know I place a tremendous amount of importance on semiconductors. When semiconductors are working, and especially when semiconductors are outperforming, as they have been, and beginning to accelerate, that's a bullish signal for the equity market. That increases the odds. Again, certainly that we're going to test those highs, increases the odds, no guarantee, and potentially break out if semis continue to work. SMH, the VanEck Vector Semiconductor ETF, very bullish rating, 9 bulls, 0 bears on the ratio, strong trend above the rising long-term trend line. So if semiconductors are working, you have to have a bullish tilt on equities as an asset class. I think that makes a lot of sense. And I think it makes a lot of sense to be paying attention to the fact that this is bullish for technology, which is 25% of the S&P 500, give or take. So this is certainly a bullish signal that we're watching. In addition, for technology, a breakout in Taiwan is compelling. Taiwan is a technology hub, right? This is the EWT, the iShares MSCI Taiwan ETF, very bullish rating, strong trend, breaking to new highs. To me, that's a bullish sign for technology, which, connect the dots, is a bullish sign for the market if tech is roughly a quarter of the S&P 500. So I pay attention to everything. I'm watching global equities. I'm watching global asset classes to formulate my view. These views don't just come out of thin air. We connect the dots and we say to ourselves, the odds are further upside for equities. Is it guaranteed? No. Again, that's why we preach a discipline and risk management process. But if we're assessing the odds on a daily basis, I say to myself, these signals point to higher equity prices. Add in the fact that breadth is improving. Look at the percentage of stocks above their 250 and 20-day moving averages, all in positions that say a healthy majority of stocks are in uptrends, right? We like to see these metrics above 60%. Well, the percentage above their 200-day is 72, percentage above their 50-day 65, percentage above their 20-day is 67. Now, remember last week we said that 20-day positioning was oversold, possibly washed out, signaling we could see a potential rally. So kudos to those who paid attention to that and took advantage of it, because we've done nothing but rally this week. Breadth metrics are improving and in a solid position in terms of arguing for further upside in equity prices. The question is, who has the momentum? We love to look at momentum. And from a 6-month time frame, the picture hasn't changed. What's interesting about it is that it's no longer an easy growth trade, right? It was easy for 2 years to just kind of own growth, right? Own the growth aspects of discretionary, i.e. own Amazon, and then own, certain areas of the home builders. Information technology, right? Growth theme pervasive throughout the market. Comm services, it's where a lot of your fan mag stocks live, right? Those were the easy trades, and those are all still bullish here. But then we started to see some cyclical recovery, and materials and industrials were areas of the market where we became more bullish. Now, those funds in the near term have neutral ratings, but they continue to outperform SPY. So I think it makes a ton of sense to have them on the radar screen. The point is, there are shifts playing out under the surface of the market, and the all-in growth trade is no longer the easy decision. Realistically, that was an easy decision to make. Now there are other aspects that are coming into play, and we have to be open to the idea that we could see some leadership on the part of other areas of the market. And I mean, that's encouraging because it broadens out participation to the upside. Remember, a big knock on the bull market for a long time was that narrow leadership focused in the fan mag, right, was not healthy. Well, if we're starting to see other groups step up to the plate and outperform, to me, that's healthy. That lines up with that breadth picture we were just looking at. Long bonds liked the election. TLT still with a very bearish rating here. But the long bond gapped higher, yields went lower. Why? Well, again, getting back to a split legislative branch, if that is the case, smaller stimulus package is a positive for bonds, right? Likely means less borrowing, less supply coming to the market. So long bonds like that. We're still in very much in a consolidation. It's so interesting that for all the back and forth this week and a lot of it being strength, um, a lot of assets and a lot of markets are still in their consolidations. Now, semis tip their hand on equities a little bit, but a lot of just consolidation playing out. But in the near term, long bonds obviously liked what they heard on Tuesday night. They rallied hard on Wednesday and followed through a little bit yesterday, but still in the range. I'm kind of watching 163 here, 163 to the upside. If that break starts to change the look of this trend here in the near term. So that's something I'm watching closely. Gold is looking interesting as well, testing the long-term trend line after a consolidation, still very much in a consolidation, just like everybody else, but this near-term backing and filling is now being tested to the upside. So we'll see how that plays out. And I think the key to the commodity trade for, in particular gold, sits right here. That gold is looking interesting as the dollar tests support. We've said for a long time, we think the dollar is one of the most interesting charts in the market. It's arguably one of the most important charts in the market. Again, same theme, still within the consolidation, testing the lower bound. Should the dollar break down, to me, that would be a signal that risk assets are going to go higher, right? That would be a really bullish data point for risk assets, equities, commodities, digital assets, likely all really start working higher on a dollar breakdown. We're not there yet. We're watching it. The flip side is if the dollar reverses and breaks this range topside, risk management is going to become important. So we're watching the dollar really closely here. We talk about it a lot, write on it every Monday, actually included in my note today. So we'll continue to watch what we think is important to formulate our views. Our key takeaways: strong week, but still in the range. Semis could be a key market tell. You know how I feel about them. Breadth is bullish. Treasuries like the election, and the dollar remains a key chart. And as always, have a great weekend. Be well, be safe. We'll be back next Friday with another update on the market environment. Have a great weekend, everyone.